Welcome back to the Dividend Diplomats YouTube channel, guys. You got your boys, the DD, the Diplomats, Bert, the Herd, and Lanny, guys. We're filming this on April 20. Is it 7th today, Bert?
That is correct. April
At
27th.
10:16 at night, drinking coffee, a little bit of milk in there. Time to burn the midnight oil, guys, because we're burning out videos for you in the community. Cheers, Bert. We got a fun video to talk about.
Yep. Before we talk about it, smash the subscribe button. Give the video a thumbs up. We're pumped up. We're continuing to bring you dividend news, dividend income. We're going to talk all dividend stocks all the time here on this channel. That's what it's all about. Lanny, you want to talk about, you want to give a little preview here for people of what we're going to be talking about today?
Yeah, a little bit of a preview, guys. Take my thumb off the hand and then put it back. It's
Where to go? Where to go?
no, no magic tricks here on today's show. But this is dividend growth investing, right? That's what we are doing to pursue financial freedom. We're trying to live off the passive income from the dividend stocks, and we want that to grow automatically while we're sleeping, while we're with family, friends, doing our passion projects and other jobs and tasks. So it's all about dividend growth investing, keyword on the growth. So today I decided to go through my taxable stock portfolio, and we're going to talk about the 5 dividend stocks, the 5 highest dividend growth rate stocks from their last dividend increase. And the question that is going to be asked, not just here on this video between Bert and I and the diplomats, but to you, the community, can they keep this dividend growth rate up on the next increase? Is their industry suffering? Is their payout ratio getting too high? We're going to look at all of that. We want your take, and you'll get our take on these 5 stocks that are in my portfolio.
I know I'm so pumped up to talk about Intel, AT&T, IBM, Verizon, and all the big hitters here in your portfolio.
No.
I'm kidding. No, it's going to be fun for once to focus on the growth and the actual companies that are growing the dividends. And what's going to be fun is these are not small dividends. We are talking double-digit dividend increase bangers for each one of these companies in the recent one. And yes, it'll be fun to see, can they keep it up? That's going to be a great, great fun time here.
Yeah, and let us know in the comments what your highest or a few high dividend growth rate stocks are in your portfolio. Again, these are just the 5 highest in my taxable account. And I went from highest to lowest. So let's start with the highest, the one that's been hitting the news because of a huge merger that's about to happen in the grocery store arena. We're talking about Kroger Stock. Ticker symbol is KR. Now, the last dividend increase from Kroger, and somebody could fact check me here, but was 23.81% for big Kroger.
Yeah, you're right. It's the facts have been checked. That's a huge high dividend increase, but that's been kind of their thing lately. They've increased that dividend for 16 years. They have a 5-year dividend growth rate of 14.94%. So Kroger, high dividend growth. That's kind of been their thing lately, and it's awesome. And 23% blew it out of the water. What's interesting though is when you start looking at some of the other metrics that go along with it, their payout ratio, their annual dividend right now after that increase is $1.04. That payout ratio is 23%. So as we evaluate, can they increase their dividend? There is room to do it with such a low payout ratio that is 23%.
So, yeah, exactly. And I mean, they're going to be taking on a big deal here with Albertson's grocery store. So 23% payout ratio currently at the 26 cents per share per quarter or $1.04 per year. So the question is, Bert, can they keep it up? Can they keep up a 23% plus growth rate going into the next dividend increase time period?
I mean, are you asking if I want them to? Of course I want them to. I own Kroger stock.
Can you handle the truth though?
Yeah. I'm a little more skeptical on this one. First off, 23% dividend increase is insane. So let me just start there. It's a very high bar we're talking here. So for them to keep that up, my concern on why I think they could potentially come under that and something in line with their 5-year growth rate or lower is because this Albertsons acquisition and the debt that's going to come along with it. What we've learned is debt's not the cheapest anymore. It's going to take some time. I could easily foresee a situation. And I think it's more likely than not they're going to have a lower dividend growth in the short term as they make it through this acquisition and clean it up. What do you think, Lanny?
I could see that. I could see that. Big deal, big resources. But I'm going to say yes. I'm going to say yes that Kroger can keep up a 23% growth rate if they want to. Payout ratio is small at 23%. What do you guys think in the community? This is the first stock, so let us know in the comments before. And again, guys, smash that freaking subscribe button and like. But let's get into that second dividend growth stock.
Number two.
I've owned this stock for, 13, 14 years now. For who is this second stock?
The flying V, Visa, ticker symbol V. Yeah, I mean, let's talk Visa. Of course, Visas, they have been on a dividend increase tear. Their last increase was 20%. And that just felt like it was nothing for them. Their 5-year dividend growth rate is 17.65%. They've increased that dividend for 14 years. They have a very, very strong history of increasing that dividend. Even though the yield's lower, it's 0.79%. They deliver on the high growth front. I mean, Landon, you want to talk for like 20 or 30 seconds here on their business model and why it's been able to grow and explode so much lately?
Payments, they're in the payment space. They earn on every swipe on your debit and credit card or digital wallet payment that you're making. Even on online payments, they're making money on interchange, sharing that interchange with the institution as well. Obviously, they had made attempts and are still in the crypto space as well from a card transactional standpoint, and they're spreading across countries still that don't even have payments yet. So the fact that Visa is there among other players such as MasterCard, they're able to increase that earnings per share, increase that revenue, increase that cash flow, which is why they've been able to reward shareholders. Now, Visa, again, always it's a growth stock, but it's also a dividend growth stock. So the P is always high at about 27 right now. That payout ratio right now is at 45 cents per share per quarter, $1.80 in dividends per year is actually only 21%. So the question now, Bert, what's your initial reaction? 21% payout ratio, just announced a 20% growth on the last dividend. Do you think they can keep it up?
Yeah, I think so. And what you talked about, a lot of things. One other point I want to highlight here: if this were American Express, if this were Discover, I would have a different answer, and I would say probably not. What differentiates Visa and MasterCard compared to them is they don't hold loans on their balance sheet. So they don't have to worry about the risk of lending performance deteriorating in the same way those other two. So I think if you have Discover and American Express, you might have a lower dividend increase going forward because of the potential recession. Visa, I think for sure can keep that growth rate up. What do you think?
Yeah, I'm going to be in the boat with the yes. Guys, do you think Visa can keep up 20%? Let us know. All right, Bert, take away the third dividend growth stock in my portfolio.
Three.
Target, ticker symbol TGT. This is one of my largest positions in my taxable account. I think they came in at number 2 when we went through that video last week. Their last dividend increase was phenomenal. 20% was their last dividend increase. It crushed it, blew it out of the water. They're a dividend king. They've increased for 51 years. Their 5-year dividend growth rate's 11.43%. It was a rebound year for Target as they went through and they had that dividend history. They kind of went like this in their 5-year growth rate. They had high, low, 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 and then they jumped back up to high. So it's going to be interesting to see if they do it. Currently, their payout ratio is 55%, so it's still in that perfect payout ratio range, and their PE ratio is just over 20 at their current share price.
Yeah. With the inventory issues, what retail/department stores are going through, I'm going to have to, say no, that they probably can't keep a 20% growth rate up like they just had, unfortunately. But hey, that doesn't mean it's a bad stock. It's a dividend king, for Lord's sake. You're 51 years of growing dividends. So I think we come back to reality. We do come back to earth. And I think Target's going to have more, modest growth here coming up.
I agree. Let us know what you think. Number 4.
Number 4.
Lanny, you want to take this one?
Guys, this is a stock that we've been talking about on this channel. Check out the, maybe last week's video on 3 dividend stocks I'm buying for passive income and growth in passive income. Growth in passive income, guys. We're talking about Elevance Health. Ticker symbol is ELV. Prior is Anthem. So just understand what they're doing. Health insurance here, guys. Their last increase was a juicy 15.63%, Bert. What do you think here?
I don't see a reason why they couldn't. I have nothing more to say about there's no reason why their 5-year growth rate's 11.62%. They're in the insurance sector. Premiums, everything are going great. I have no reason to believe that they wouldn't. So I'm going to say yes, because it's much more fun to say that they're going to crush their dividend increases. What do you think, Lanny?
Yeah, I'm going to say yes. I'm going to say they can at least do a 15.63% growth going forward. Payout ratio is actually, we thought we couldn't get less than Visa at 21%. Payout ratio for Elements is actually only 18%. So they could keep blasting the roof off of that dividend.
Number 5. We're heading to the oil sector. We're talking Royal Dutch Shell, ticker symbol SEHL.
Very interesting. Again, they kind of made it on the list here simply because they really drastically reduced the dividend during COVID. You guys remember that. But since then, they've been drastically getting back the dividend back to the shareholders. So again, we're only basing this off of not an average growth rate, but the last dividend growth rate. And their last true increase was 15% from 50 cents to 57.5 cents. Somebody can correct me wrong in the comments if that's not the case. But 15% was the last growth rate for this big oil company.
Liar. You're a liar, Lane. No, I'm kidding. Yeah, that's fine. That checks out. You're right. It was awesome. They were coming back, and what gives them a little bit more momentum compared to some of the other legacy places that didn't cut their dividend is Shell is rapidly building back that dividend to where it was. So you have their Bischoff coming through saying I'm back, but they've also gotten a little boost in the price per barrel of oil over the last year. That's also helping them grow their revenue and propel them have the cash flow to get that higher dividend.
Yeah, I mean, payout ratio still well under 30%. I have about 27.58 based on forward earnings from what I can find on Yahoo Finance for Shell. Again, ticker symbol is SHEL. Price to earnings ratio is also pretty low at below 8 in the oil industry with a above average dividend yield close to 4%. So interesting stock for all those looking for a possible stock to buy. But yeah, Shell 15%. I agree. I think they can keep going. So Bert, you think they can keep going at 15%?
Yep. I was just looking it up while you're talking. The price per barrel is 75. That's a sustained high level where it's been since early 2022 when they announced that massive dividend increase. I don't see why they couldn't easily just keep it going. What do you think?
Let's keep that money flowing. Actually, what does the community think about Shell? Do you own Shell stock, and can they keep up the 15% growth rate? Do you think they're going to get back to that? What was it, 94 cents? Sooner than later, maybe within the next 5 years. Let us know in the comments below.
Yeah. So everyone, again, the 5 stocks were Coven Laney's top 5 dividend growth stocks: Kroger, Visa, Target, Elements / formerly Anthem, and Royal Dutch Shell. All fantastic dividend growth stocks that crushed it last year. To summarize, do we think they're going to keep it up? Do we not? Kroger, yeah, Laney was a yes, I was a no. Visa, we were both yeses. Target, we were both no's. Elements, both yeses, and Shell, both yeses. So we only had one disagreement here on this list.
So guys, let us know in the comments on these 5. Do you think they can keep that last dividend growth rate up? Let us know. Don't forget to like this video, subscribe to this channel, guys. Keep pursuing financial freedom, buy those dividend stocks, and grow that passive income, baby.
And if you're not with us, you're against us.
Guys, that was Bert and Lanny from the Dividend Diplomats. Over and out.